Are you looking at purchasing a multifamily property, but you're not sure what the term cash flow and NOI means and how they work together? Well, in this video, I'm going to walk you through the difference between NOI and cash flow, and it's a really big difference. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 12-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and the author of the real estate book, Sell for More. So let's get right into it and talk about the difference between cash flow and NOI, because this is a very important distinction to make. So let's first cover NOI, then we'll get into cash flow. So we all know that the net operating income, or NOI, is calculated by taking your gross income, subtracting your expenses, and that's going to give you your NOI. So your gross income for a multifamily property, that will encompass your rents, your gross rents, any ancillary income sources you have. So that could be laundry, that could be covered parking, premium parking, trash pickup, storage, rentals, that sort of thing. All your income gets lumped into your gross income. Then you subtract your expenses on the property. This could be maintenance, utilities, staffing, anything like that, anything business expense related, that's going to go into your expenses. Now, when you take your gross income and subtract your expenses, that gives you your net operating income. So the income generated by the business of the real estate property. So for example, let's say I have $1 million in gross income, and then I have expenses of $450,000. That's going to give me an NOI of $550,000. Now, herein lies the difference between NOI, net operating income, and cash flow. We're not even factoring in debt service. The reason why we don't factor in mortgage payments or lines of credit, anything to do with debt, is it's discretionary. One owner might have a property leveraged up to 80%. Another might do 80%, but at a different interest rate. Another might leverage to 50%, and another owner might buy the property for all cash. It's really dependent upon the investor and the buyer, and this doesn't factor in to the net operating income because debt is discretionary. It has nothing to do with the business operations of the property. And this is where above the line, below the line comes in. And I'll put a link up here for a video I did of talking about above the line and below the line. So here's the imaginary line. No debt service up here with NOI. When we go below the line, that's when we factor in debt service. So let's say this property has a mortgage and the payments are $300,000 a year. What we do is we take our net operating income, subtract, so we take $550,000, subtract $300,000, and that gives us a cash flow now of $250,000, because now we're factoring in debt payments, whether it's mortgages or lines of credit, anything like that, into the cash flow generated. Net operating income, just remember, is business. This is the net operating income generated by the business of the real estate, and then cash flow is the cash flow generated, put into the owner's pockets, and that takes into account debt service. So this is the line right here, but check out the other video and I explain that in a little more details. If you have any questions about NOI and cash flow, or if you'd like to learn more about the properties I'm currently working on, head on over to callseth.com and set up a quick 20-minute phone call with me. And if you like this video, leave a comment, let me know what you think, hit the like button, and until next time, happy investing.